And joining me at the table are Vincent Mortier, Amundi's Group Chief Investment Officer.
Hello to all.
Deputy Chief Investment Officer Philippe Dorgeval.
Good afternoon.
And Head of the Amundi Investment Institute, Monica Defend.
Hello, thank you.
Thank you for joining us this afternoon. So we just had this very engaging discussion about, well, the complexity of the new geo-economic environment. Based on these structural developments, Monica, what themes should investors focus on today?
Trade, security, longevity. I think that the reorganization of global trade is probably the most visible shift. It will be growth detrimental. It will drift inflation higher, but eventually the strategic response will be opening the door to new alliances and markets. And this shift is really accelerating the global supply chain rerouting that we have been seeing since the pandemic, with Europe being a key player. I'm thinking about the trade agreements that Europe is signing with China, India, UK, just to diversify out of the US. Security. Security goes beyond defense spending. I'm thinking about technology innovation, AI, energy security. We think there is a global rewiring of the financial system with the US-led framework under the spotlight, questioning about fiscal credibility. And then there is longevity, which is a big transformation, structural in the society. We are going to live longer, but we want to live larger, maintaining the similar standard of living we had before retiring. And this is shaping consumption, is shaping the labor market and retirement. We see a new geoeconomic order that needs integrated thinking. So really connecting markets, trade, demographic will be key, because it is not just about managing risk, but we really need to unlock growth from a fragmented world.
Thank you very much, Monica. Vincent, given all the shifts that Monica has just mentioned, how should investors rethink their portfolios?
Well, more and more investors are starting to realize that their allocation to US assets might be a little bit oversized. And that's because of benchmarking in particular. So just to give an illustration, in the All Country World Index, US is around 2/3 of the index, while India plus China is roughly 6%. While at the same time, US share of GDP in the world is 26%, and it's even only 15% if you think in purchasing power parity. So in the past, this has worked out pretty well for investors, but now there are some structural changes at play. Will US remain exceptional forever? What is the course of the US dollar, for example, and will correlation be the same as before? So we believe that these changes are quite structural, and so it's better to act upon them upfront and not wait for the market structure to evolve, and as a result to start thinking of modifying strategic allocations.
Thank you very much for that. Philippe, now, as mentioned by Vincent, we are seeing US exceptionalism fading. So what will be the role of European assets for global investors?
So let me start by sharing a key figure, 15%. This is the year-to-date outperformance of European equity versus US in euro term. We see strong investor interest for Europe, which is set to continue for several reasons. It's true that GDP growth in Europe is modest, but significant reforms and initiatives are taking place to address the competitiveness challenges of Europe, which are well described in Mario Draghi and Enrico Letta reports. We expect large upcoming investment, around 500 billion euro, each in defense and infrastructure, that will positively impact growth across Germany and Europe. But it's more than just numbers. it's Europe taking greater control of its destiny, strengthening investor confidence. Europe also benefits from high level of savings, low level of corporate debts, and a significant decline in risk in peripheral nations. So the region is safer for investors. And in current turbulent times, stability and trust are key. So finally, as Christine Lagarde, President of the European Central Bank, recently said, the ongoing changes and uncertainties create the opening for a global euro moment. So for investors seeking diversification, as Vincent said, Europe is becoming a key part of any portfolio.
Thank you very much. Monica, let's look forward now. What are the themes that you think investors should be paying very close attention to in the next 12 months, let's say?
Well, I refer to the outlook we just published. Policy shifts and noise. These shifts are coming both as opportunities, thinking about the industrial and the economic reconfiguration we are observing, but also as challenges. Higher inflation, potential pressure on corporate margins, increased market volatility, increased demand for safe asset, debt sustainability. And this is also challenging the monetary policy conduct because central banks need to cut rates amid the slowing growth, but managing inflationary pressure. Meanwhile, Asia is emerging as a clear winner from this rerouting of global supply chain, thinking about India, thinking about China. So I believe these themes speak to a broader narrative. The world is not just slowing, it is rebooting. And as investors, we need to think how to balance risk and uncertainty with growth potential in a world where old anchors do not hold anymore.
So amid this reboot, clearly Europe is having a bit of a moment, I guess, Philippe. So where do you see the most appealing opportunities in the next year or so?
So we see several opportunities. We are positive on European equity. We expect moderate growth in Europe for the next 2 years. But inflation is on a clear path towards normalization below 2%, that is supporting the easing policy of the central bank. In the second part of the year, a reduction in trade uncertainty combined with lower interest will create the setup for a pickup in investment. The current environment will also support small and mid-cap companies, which are trading at a 20-year low compared to large cap, and are also less exposed to US tariff negotiations. Defense and electrification will also continue to be an opportunity of investment in the medium terms. So let's move to the fixed income space. We focus on high-quality credit, supported by the robust fundamentals within the corporate space. We expect yields to decline across the curve, and we are constructive on duration. And with European bond yields being at their 10-year high and a strong euro, we believe that European bonds should play a key role in many fixed income portfolios. So finally, in Europe, we see the benefit of diversification towards private assets, in particular with a focus on financing the energy transition.
Thank you very much. Vincent, let's conclude this roundtable discussion with your message to investors for the next 6 to 12 months.
So four key messages. First one, as said by Monica and Philippe, now it is time for Europe. But on equities, we believe that it's time also to go beyond the main concentrated indexes, like the DAX, or to go beyond the very fashionable themes, which have paid out quite a lot, like defense and banks. So time to broaden the horizon and to go, for example, small mid cap, as I mentioned by Philippe. There are many opportunities around. Second, manage more than ever your Forex exposures. Forex is an active, conscious decision to be made. It's not something you need to suffer from. You can hedge, you can keep your exposure, but it should be a decision. And in particular, on the medium and long-term perspective, we believe that the US dollar will continue to be under pressure gradually, but surely. Third, on fixed income, we are indeed positive, but we believe that the curves will continue to steepen. So we are more cautious on the very long end of the curve. So we prefer the medium term than to long end of the curve. And as well, we are still cautious on low quality credit, which are still too expensive, and the cost of risk will probably rise in the near term with the slowdown of the economy. And fourth, last but not least, diversify. Continue to diversify, and like in commodities, including energy, on gold, on volatility, for example, but also on some real assets, private debt, for example. Of course, on a selective manner, so selecting carefully your manager, and Amundi, of course, is the first choice to be made.
Thank you very much. That was to be expected. Well, thank you very much for this very helpful breakdown of where to look for opportunities and what risks maybe to avoid. What a great start to the Amundi World Investment Forum. We're now going to take a break of 20 minutes, followed by your breakout sessions. And a reminder that if you registered for a breakout, your web app will tell you where to go. If you already know which session you are in, the room assignments are on the screens around us. So we'll reconvene here at 4 o'clock sharp, please, ladies and gentlemen, starting with a panel on growth markets before a focus on India with the chairman of SBI, that's India's largest bank, and a long-time Amundi partner. Have a great break. Thank you.